So, before the break, we were talking about how divorce can really mess with your credit.
Yeah, especially if you're not prepared. And we saw how, like, even those divorce decrees, they don't always work the way you think they would when it comes to credit.
Right, exactly.
So let's shift gears a bit. Let's talk about some things people can actually do to protect their credit during this whole process. What would you say is the most important thing to focus on?
Well, I think building a solid credit profile on your own,
Okay.
like as an individual, that's really key, especially for, spouses who maybe didn't have a ton of individual credit during the marriage.
Yeah, that makes sense. If you're used to like relying on those joint accounts or being an authorized user, going solo with credit can be like really intimidating.
It can.
So where do you even begin? Like how do you build credit from scratch, especially when you're already dealing with all the stress of a divorce?
Right. Well, it can be daunting, but there are some things you can do. A good place to start is a secured credit card.
Okay, tell me more about those. I've heard of them, but I'm not really sure how they work.
So basically, with a secured card, you give the issuer a security deposit,
Yep.
and that usually becomes your credit limit.
Hmm.
And then you use the card, you pay your bills on time, and that shows lenders you're responsible.
Yeah.
You start building a good payment history.
This is kind of like training wheels for credit.
Exactly, yeah. A chance to prove you can handle it without too much risk.
I like that. And then what? That helps you get approved for like regular credit cards and loans later on.
Exactly, yeah. It's all about building that track record.
That makes sense.
Oh.
Any other options for someone starting from scratch with credit?
Well, you could also become an authorized user on someone else's card,
Oh, okay.
like a friend or family member, someone who's responsible with their credit.
Right.
Their good history can help boost yours as long as they keep doing things right.
It's like you're borrowing their good credit, kind of.
In a way, yeah. But it's important to remember if they mess up, like miss payments or max out the card, that can hurt your score too.
Oh, right. So there's some risks there too.
Definitely.
Okay, so let's say you've already got some credit cards in your name, but they're joint accounts with your soon-to-be ex. Should you just cancel those to avoid problems during the divorce?
Well, not necessarily. Canceling cards, especially if they're older and you have a good payment history, that can actually hurt your score.
How so?
Well, it can make your credit history look shorter. And if those cards had a lot of available credit, it could also increase that credit utilization ratio we talked about.
Right, right. So even though it seems counterintuitive, keeping those accounts open could actually be better for your credit in the long run.
Yeah, exactly. It's all about minimizing the damage, right? Especially when you might need good credit to like rent a new apartment or get a car loan.
Yeah.
But definitely keep an eye on those accounts. Watch out for any unauthorized charges. Maybe even set spending limits or alerts if you can.
Good point.
Yeah.
So monitor those accounts, build up your own credit. Anything else people should be doing to like stay on top of things?
Documentation, documentation, documentation. Seriously, keep really good records of all your financial stuff during the divorce.
Okay.
Like credit card statements, loan
Yeah.
documents, emails with creditors, even notes from phone calls.
Wow. Okay. Document everything. But why is that so important? It just seems like more paperwork on top of everything else.
I know, it can seem like a lot. But trust me, if any disputes come up later on, having that proof can be a lifesaver.
Hmm.
It protects you. Make sure you're not held responsible for debts that aren't yours.
Okay. So it's like having evidence to back up your claims.
Exactly. And speaking of evidence, keep an eye on your credit report throughout the divorce process.
You mean like check our credit reports?
Yep, you can get a free credit report from each of the 3 big credit bureaus, Equifax, Experian, and TransUnion once a year.
Right.
Checking those regularly can help you catch any errors or, signs of identity theft, which unfortunately can happen during a divorce.
Wow. Okay. It's so easy to get caught up in the emotions and forget about those practical things. Anything else we should be watching out for?
Well, think about those existing loans too, especially mortgages and home equity loans.
Right.
Those are usually tied to the house, and it can be tricky to remove one spouse from those.
Yeah, those aren't like credit cards that you can just close. So what happens with those types of loans during a divorce?
Refinancing is usually the best way to separate one spouse from the mortgage or home equity loan.
Okay.
So you're basically applying for a new loan with just one person on the title and using that to pay off the old one.
So refinancing lets you break free from that shared debt on the property.
Exactly.
But doesn't that mean you have to go through that whole loan application process again?
It does, yeah. Credit checks, income verification, and you might even end up with a higher interest rate if your finances aren't as strong on your own.
Right. It sounds like a lot.
It can be, but it's probably worth it to avoid any financial ties with your ex.
Yeah. I agree.
And this brings me to another important point. Don't be afraid to ask for help.
Oh, yeah.
Divorce is complicated enough, and all this financial stuff, especially credit, it can be overwhelming.
It really can.
Talking to a financial advisor or a lawyer who specializes in divorce and finances, that can be so helpful.
Yeah, because everyone's situation is different.
Exactly. There's no one-size-fits-all solution.
Yeah.
A professional can help you figure out what's best for you.
Okay, so we've talked about building credit, documenting everything, monitoring those accounts and credit reports, and getting professional help. Is there anything else our listener would keep in mind while navigating, this credit minefield during a divorce?
Well, one last thing, and it's an important one. Be patient.
Okay.
Rebuilding credit or even starting from scratch, it takes time.
Right.
There will be bumps along the way, but if you stay informed, make good choices, and get support when you need it, you'll get through this, and you'll set yourself up for a better financial future.
That's a great message. Divorce is tough, but it's also a chance for a fresh start. And taking control of your credit is a big part of that. We've covered so much today, but there's still more to talk about.
Oh, yeah.
In our last segment, we'll look at those long-term impacts of credit decisions during a divorce and why thinking ahead is so important. Stick with us. And we're back for our final look at credit and divorce. I mean, we've covered a lot. From the different types of credit accounts and what happens to them during a divorce to, those steps you can take to really protect yourself financially.
Yeah, it's been a pretty deep dive into credit.
It has.
And it's clear that this is something that can really, make a big difference in people's lives, especially when they're going through a divorce.
For sure. So let's talk about the long-term impacts of all those decisions about credit that you make during a divorce. We touched on this a little bit, but it's worth spending some more time on it.
Oh, absolutely. When you're in the middle of a divorce, it's easy to get caught up in the immediate stuff, the emotions, the challenges.
Yeah.
But you got to think about how your financial choices now will affect you years down the road.
Okay, so give our listener a picture of what you mean. What kind of long-term consequences are we talking about?
Well, think about your credit score.
Right.
That's going to be a big factor when you try to get a loan later, like for a car or a house.
Right.
Heck, it can even affect your ability to rent an apartment or get certain jobs.
Really?
Yeah. If your credit score takes a hit during the divorce, it can take forever to rebuild, and that could cost you a lot of money.
Okay.
Like thousands of dollars in higher interest rates and fees over time.
Wow, that's a huge impact. Like one financial problem leads to a bunch of other problems.
It's true, kind of a domino effect.
Yeah.
That's why being smart about your finances during the divorce is so important.
Absolutely.
Yeah.
And it's not just about the numbers, right? Like the emotional stress of all this financial stuff on top of the divorce.
Oh, absolutely.
That's got to be really hard.
It can be. You're already dealing with the divorce itself, then you add debt and credit problems.
Yeah.
That can make you feel overwhelmed and unstable for a long time.
Yeah. That makes sense. So if you had to give one piece of advice to someone going through this, what would it be? Like, how can they navigate this and avoid as much damage as possible?
Well, first, don't freak out.
Okay.
The more you know about credit and divorce, the better decisions you'll make.
Right.
Second, talk to your spouse.
Okay.
Be open and honest about your finances and what you want to achieve.
Yeah.
I know those conversations can be tough,
They can be.
but it's better to work together, even if it's just on the money stuff, to make things less painful for both of you.
Absolutely. Communication is so important in any relationship, but yeah, especially during a divorce.
Right. And remember, you don't have to do this all by yourself. Talking to a financial advisor or a lawyer who really knows about divorce and money, that can be incredibly helpful.
Yeah, a professional can give you advice that's specific to your situation, right?
Exactly. They can help you figure out your options, negotiate a fair settlement, and come up with a plan to protect your credit and your finances in the long run.
So for our listener who might be feeling a little lost in all of this, what's the main thing you want them to remember?
I want them to know that divorce is tough, but it's also a chance to start fresh. If you take charge of your credit, you can come out of this stronger, more financially secure, and ready for whatever's next.
That's such a great point. It's about taking control of your financial future, even when everything else feels uncertain.
Exactly.
And remember, knowledge is power. You have the resources to make smart choices.
Absolutely. And if you need to revisit anything we talked about today, you know where to find us.
Thanks for joining us for another deep dive. We'll catch you next time.